Big tax changes are on the horizon. The House just passed a massive One Big Beautiful Bill Act, packed with permanent cuts, new deductions, and major shifts for both individuals and businesses. But it's not law yet. The Senate is expected to make changes, and that could shake up what stays and what goes. In this video, I'll walk you through the key highlights and do a deeper dive on one of the most talked about updates, the SALT deduction. Let's break it down.
All right, so the House just passed their tax bill, and like I said, it goes down to the Senate, and there's going to be some haggling at that point. So I'm going to highlight in the next two slides here some of the changes that were noted in this House edition, and then I'll update you once it gets through to the Senate here. So starting out, lower tax brackets stay 10% to 37%. Tax brackets will continue. Standard deduction made permanent, increased until 2028. Child tax credit raised to $2,500 for 2025 tax year this year through 2028. Estate tax exemption jumps to $15 million next year in 2026. This has been a hot topic here, where it was talk about decreasing this. The SALT cap increased to $40,000 from $10,000 starting in 2025, but phased out after $500,000 of AGI, adjusted gross income. And I'm going to show you an example here at the end part of this video of a tax return and what this really means. But it is big. No tax on tips and overtime pay for 2025 through 2028. Auto loan interest deduct up to $10,000 if your car is purchased after 2024. And then the Trump accounts, $1,000 tax favored savings for newborns. And then the last slide here, charitable deductions for non-itemizers. So if you recall, during COVID, this happened for a couple of years, for I think it was 2020 and 2021, where if you just took the standard deduction, as you know, you can't deduct charitable donations, but in this proposed tax bill here that's going to go to the Senate, that is an option. So if you're a standard deduction taxpayer and you make charitable donations, you'll be able to deduct those. 529 plans can be used for K through 12. Scholarship donations equates to a new tax credit. That should be pretty interesting. Bonus depreciation 100% through 2029. R&D expensing. So businesses out there developing new products, creating, this is really big. Deducting domestic R&D for 2025 tax year this year through 2029. And then QBI becomes permanent and increases to 23%. So right now it's at 20%. And this is for pass-through entities. So if you own an S Corp or an LLC, this is a nice little bump here to 23%. Opportunity zones extended and expanded, and Section 179 expensing limits increased. So these two slides here are kind of the highlights. And now I'm going to walk through with you this SALT portion. I'm going to show you an example of a tax return so you can kind of see the impact of it. And I will also highlight this charitable donations so you can see the impact of this for taxpayers out there. All right, so here's, I'm going to walk through the SALT deduction as well as the charitable donation deduction. So you can see here, if you pull up your 2024 tax return, there's a line 12, standard deduction or itemize. And typically people that own a home that have mortgage interest or make considerable charitable donations typically itemize. But this line, you pick the greater of the two. And the standard deduction in 2024 was pretty significant. It was like $29,000 for a married filed joint. But if your itemize is higher, you're obviously going to take that. So in this example, the itemize was $39,700, which is higher than the standard deduction. So these people itemized. Now, just say if they were just a standard deduction taxpayer. In 2020 and 2021, there's this charitable donation line item, if you remember, where if you made charitable donations, but you don't itemize, you got to deduct those here. And I think the cap was $500 or $600. So it looks like in the new tax bill, that's going to be coming back, which would be nice for those that take the standard deduction and also make charitable donations. Now, if we look at the itemized schedule here, you can see here there's a section for charitable donations. So people that make charitable donations, but if their standard deduction is higher than their itemized, they don't get to take the deduction that they made for charitable donation. So that would be a nice win there. But now let's go up to the SALT. So SALT is state and local tax. And back in 2017, there was a cap that was put on this, that the most you can get for this deduction was $10,000. And this line includes real estate taxes and income taxes that you pay to the state. Okay. So in this example, you can see here that their total SALT or, state and local tax was $40,000, but the most they could deduct was $10,000. Now, under this new bill right now, it's saying that the cap is $40,000. So if you look at this, so right now, the difference of 40 and 10 is 30. So we would add 30,000 to their 39,000. That would be $69,000. If we go back to page 1 here, you can see here's that 39,000. This is going to go to 69,000. They're going to reduce their taxable income by 30,000, right? Because they got to add in that additional 30,000 of deduction. Their tax is going to decrease, and right now they're showing an amount due, and that's probably going to decrease as well. So it's a pretty big thing here on the cap. Now you see here their adjusted gross income; it's below that 500,000. So if you want to look at your tax returns, and if your AGI is below that amount, the proposal right now that just passed the House, they would qualify for that. Now, if your AGI is above 500,000 for married file joint, it looks like there's going to be a phase out. So you may not lose all of it. Just say you had $600,000 of income. You may not lose all of that. But it'd be interesting to see what happens. So I wanted to add this in here just so you can see what SALT means. And if you want to take a look at your tax return to kind of see, how that could, play out for you. But we've sent this off to our clients. It was last week. We sent a note out. We got a lot of responses back of positive because, their deductions are going to increase because a lot of them kind of itemize, and and even those that maybe just fell below the standard, the itemized. So there are a lot of people, the standard deduction was 29,000. Their itemized was at, 28,000. So they took the standard deduction because it was higher. But now with this cap increasing from 10,000 to 40,000, I think a lot of people are going to be itemizing here. So that's that. If you have any questions, leave them in the comments below. Thanks.